Assalamualaikum. My name is Iva Natasha Arena binti Zulkifli. I will be presenting on the Helmi's financial planning debt management part. So, first thing first, what is debt management? Debt management simply shows how a person or family handles the money they owe. It includes making sure how they can pay all the bills and loaned on time. At the same time, not borrowing too much and also trying to reduce what they owe over time. So, a good debt management plan helps to reduce financial stress and it can make it easier for anyone to save in the future. So, in Encik Helmi's case, we analyze his current loans, debts, and obligation to see how well he and his wife managing their debts and whether we can see any improvement can be made. As you can see on your screen right now, these are the Helmi's debt profile. The list of the debts are includes their house loan, their car loan, UOB credit card, and buy now pay later, which is Helmi's laptop. Out of this list of debts, the most burdensome item is Helmi's car, which is the payment is 3,200 per month. And the second thing is his UOB credit card, which is the interest rate 18%. A part of this, I also include their monthly and annual obligations. As you can see on the annual obligations, the part of Helmi's car insurance cost, which is 8,000, is very worrying. These are the debt analysis that I made for the Helmis. I totaled their debts and I got the figure 357K and I tried to calculate their debt to income ratio. I total Helmi and Halima's monthly income, which is I got 13K, and I total their debt repayment, which is I got 6.7K per month. So from here, I can get their DTI ratio, which is the score is quite worrying, 52%. And as you can see on the indicator below, DTI score above 50% is a high risk borrower, and this could limit this family from getting any new loans approval in the future. To help on this family debt management, first, we need to identify what is their debt issues. First thing first, they score high DTI ratio, which is 52%. Second, their expensive monthly payment of Toyota Harrier. Third, their UOB credit card outstanding payment. And last but not least, I can see that they have no structured plan to reduce their total debt. Handle the debts efficiently and what the Helmis should do. My recommendation for them is to pay off the credit card immediately to avoid and save on the 18% interest. Use Helmi's salary raise 1,500 to settle this payment within 2 months. And Helmi need to avoid using his credit card at the moment unless if it's for emergency purpose. Next, Helmi also need to reassess his vehicle financing. Toyota Harrier car loan 3,200 a month is a very high commitment for him. He needs to consider refinancing the car or maybe downgrade it to a more affordable car such as Pro 2 Beza or Ativa. This actually could help him later on, help to reduce the cost of insurance. The Helmi should avoid taking or apply any new loans. They need to set a debt to income ratio lesser than 40%. They need to gradually reduce their monthly debt to 5,000 or less. They need to sacrifice some spending for their long-term stability. Next, they should maintain their buy now pay later payment. Keep maintaining the payment of the laptop as usual until the payment is over. And they should avoid taking new BNPL at the moment. They also should continue paying the house loan as usual and avoid any missed payment. Helmi can allocate some money to top up on the principal payment if there's any surplus. They also can rent out the inherited house, use the rental income for mortgage payment or debt payment. I can see from here that the market value of the house is 420,000, which potential rental market is around 1,500 to 2,000 per month. They can use this income to actually create education fund for the kids. Last but not least, they should create a financial planning for their future. Create a proper monthly household budget to track all of the spending, all of the income, and try to avoid any unnecessary spending. They also should prioritize needs over wants, when making financial decisions. Set a clear goals to reduce debt, grow emergency funds, and planning for their retirement, as well as for their children's education. That's all from me. Thank you.
Assalamualaikum, my name is Noraina, and next I will be presenting the saving goals for Encik Helmi's family. Based on the information that been given, the family currently has some saving, which is KWSB Helmi 240,000 ringgit, Halima ASB 50,000 ringgit, emergency fund 5,000 ringgit, joint saving account 2,200 ringgit, and tabung haji Helmi, which is 3,500 ringgit, and Halima 2,300 ringgit. However, there are still gaps between their saving and their loan. So I already planned with the recent 1,500 ringgit salary risk Helmi we receive. So we propose the following month. So I already planned with the recent 1,500 ringgit salary risk Helmi we receive. So we propose the following monthly allocation: 450 ringgit for Hana Education Fund by opening SSPNI plus ESB. Second, 450 ringgit for investment like ESB or tabung haji. And the third one, 300 ringgit to top up the emergency fund. Fourth, 100 ringgit, 150 ringgit for joint saving account, and the last one is 150 ringgit for Halimah personal savings and start Halimah voluntary saving in KWSP since she self-employed. So for Hana Education, we estimate a cost of study is RM 80,000 up to 100,000 if she chooses a private university. So we suggest starting SSPNI plus and topping up existing savings monthly. Second, for retirement, Helmi already has a solid base in KWSP, but to improve their retirement lifestyle, they could turn the inherited property in Taman Sri Gombak Selangor that worth 420,000 ringgit into a rental house. So this could generate an extra 2,000 ringgit a month in passive income. So in conclusion, by following these saving plans, Encik Helmi family can secure their future financial.
Assalamualaikum and good day. My name is Sarah and I will be presenting part 3 of our group assignment, which is insurance management for Mr. Helmi's family. Alright, objective. The objective of this section is to assess the current insurance coverage of Mr. Helmi's family, identify financial risks due to insufficient protection, and recommendation improvement based on good financial practice. Alright, based on the information provided, Mr. Helmi is currently paying RM850 per month for a family takaful plan, but the total coverage amount is not mentioned. His wife Halima has no insurance coverage at all. Their 2 children are covered under a medical card, which costs RM550 per month. However, Mr. Helmi and Halima do not have medical card for themselves. In terms of saving, the family only have 5,000 as an emergency fund. Both cars owned by the family are insured with RM8,000 per year for the Harrier and RM2,000 per year for the Vios. Okay, we go through to identify risks. There are several financial risks identified in this situation. First, the takaful coverage amount for Mr. Helmi is unknown and may be insufficient in the event of his death. Second, Halima has no insurance coverage at all, which makes her financially vulnerable. Third, without medical card, any health emergency could force the family to use their limited saving. Lastly, the emergency fund of 5,000 is not enough to cover serious medical or unexpected life events. Alright, so let's go through to the calculation. Let me now share the calculation that support our analysis. Mr. Helmi's annual salary is RM114,000. Financially, the recommended minimum coverage should be 10 times the annual salary, which means Mr. Helmi should have at least RM1.14 million in life coverage. Currently, in his payout is only 500,000. This would likely be insufficient for medical protection. A card for both Mr. Helmi and Halima would cost RM250 per person and per month, totaling RM6,000 per year. Compared to their emergency fund of only 5,000, this shows that medical cards are more secure and affordable. We also perform a death benefit simulation. If Mr. Helmi passed away, his family would face financial commitment including a home loans of RM257,000, education expenses for Hana of up to 15,000, and daily living costs of RM2,000 per month for 20 months, which total RM48,000. This brings the estimate total to between RM315,000 and 400,000. Therefore, a 500,000 payout may not be sufficient for the long term. Alright, we go through to recommendation. Based on this finding, we recommend that Mr. Helmi review his takaful plan and ensure it cover at least RM 1.14 million. Halima should get a basic takaful plan with an affordable monthly premium between RM 200 and 300. Both Mr. Helmi and Halima should also get medical card to avoid using their saving for hospital bills. Finally, they should review their car insurance policy and consider adding coverage such as windscreen and passenger protection. Alright, so for the conclusion, Mr. Helmi family does not yet have strong enough protection. But with the step we have recommended, they can reduce their financial risk and better prepare for the future. That's all from me. Thank you.
Hi, Assalamualaikum warahmatullahi wabarakatuh. Okay, I will present about the tax planning of the Helmi's family. Okay, okay. Here is the tables. Income tax assessment of both Helmi and Halima. Okay, as we can see here. Here I put a salary of Helmi and Halima, which Helmi is 115,000 and Halima is 42,000. Okay, this is the salary for 1 year per year, and then we can see here, Helmi got self and independent relief, which is 9,000, and Halima also get 9,000. But for the lifestyle, only Helmi is covered. Okay, and then for the unmarried child relief, got only Helmi, which is 5,000, and then EPF also only Helmi, 5,000, life insurance 2,000, medical education 2,000, and this all is for Helmi. And then the total of tax release for Helmi is 25,500, but for Halima it's only 9,000. As we can see here, so the total rebate for the Helmi is 5,400, but for Halima is only 3,600. Okay, so the tax that need paid by the Helmi is only 1,850 ringgit, but for Halima, she doesn't have to pay for the tax. Okay, for the tax optimization that we can do for Helmi's and Halima family. Okay, the first one is reduce monthly PCB to 1,051 cent. Okay, as before this, the PCB that needs to pay from Helmi is 1,000 per month. So we reduce it to 151 ringgit per month. Okay. So what Helmi needs to do is by submit TP1 form to employer to reduce monthly PCB. And then next, what Helmi can do for her tax optimization, claim full 8,000 education relief. Okay, where Helmi can open SSPNI for Hana and then contribute 8,000 per year for the tax relief. Okay, and then for the third is additional 3,000 which come from Halima, where Halima can invest 3,000 per year in PRS. Okay, for the tax relief, and then Helmi also can claim disabled child relief for Hamdan, where but Hamdan have been registered to JKM first, and then Helmi can get 6,000 ringgit for the tax relief, and then for the pay via EPF pre-filing. So Helmi and Halima should pay zakat through EPF or LTH for tax deduction before filing. Okay, as we can see here, this is the best use of tax return. Okay, I have maximized the tax relief for the Helmi and Halima family. Okay, so this is the total that she can save from her tax. Okay, and the total is 11,848 ringgit point 75 cent. Okay, so I divided into 5. What she can do with the tax return. Okay, the first one is 3,500, where he can use for the Hamdan special need to ensure lifelong financial support without disqualifying government autism benefit and avoid future dependency. Okay, and then second, she can use that money for the emergency fund, 1,575 ringgit. Okay, for her safety and then using for the emergency when happen emergency to their family. Okay, and then he can use the tax return also to pay the high interest debt. Okay, which I calculate it's 2,500. Okay, for her credit cards payment. Okay, and then for Harna's education, SSB and I, 1,710 ringgit. Okay, compromise solution, fund private uni option for the as option for the Halima. Okay, with SSBN offer tax relief 4 until 5% returns. And then for the Halima retirement, by SB or PRS, so she can use money from the tax return from Helmi, which is 1,000. Okay, so as now as she doesn't have EPF, so she can contribute to PRS and then get a tax relief for the next year tax planning. Okay, so as a conclusion about the tax planning, we can conclude, okay, the goals that Helmi and Halima can achieve. What Helmi and Halima can achieve? Okay, ensure Hamdan well-being. Okay, where how this education address it. Trust plus emergency fund cover therapy and care of Hamdan, and then children education SSB NI Damsey Harna fund without loan, retirement existing, where we can use by investment in ASB or PRS, both for Halima and also Helmi retirement saving, and then mortgage paid if debt, we can achieve it, where debt clearance and then improve cash flow for insurance premium.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurfadila binti Fazli Sam. So I'll proceed with the estate planning. The first one is, what is the estate planning? Estate planning is the preparation to manage an individual asset based on the event of incapacitation or death in the future. Okay, the purpose of the estate planning is to help your family to avoid any dispute regarding the asset that left behind, which means it is to avoid any family argument that lead from the wealth left behind when you are sudden death or in coma or involved in accident. Okay, this also can be your loved one to carry your wish in the state of medically incapacitated. Okay, next will be Encik Helmi and Halima estate planning. Okay, both Encik Helmi and Halima possess few assets that they gain throughout their marriage and also inherit from their parents. For example, Encik Helmi possess Toyota Harrier car, and Mrs. Halima possess Toyota Vios car, which combined will be market value around 179,000 ringgit. And Encik Helmi also possess 2 unit of house with the market value of 970,000 ringgit. One of the house he gained from throughout the marriage, and one of the house he inherit from his late father. They also possess an saving account around 5,000 ringgit, which is emergency fund, and 2,200 ringgit in joining saving. And Encik Helmi also possess an investment around 15,000 ringgit in ASB, and also both of them have a saving in tabung haji around 5,800 ringgit. And Encik Helmi also possess a retirement saving in KWSP around 240,000 ringgit. Why Mrs. Halima don't have any? Because she is a housewife. So it is recommended for Encik Helmi to follow to draw a will 1/3 from his wealth, but both of them keep on postponing to draw a will. So here are some steps of handling a will in Malaysia for Encik Helmi to follow. The first one will be legally validity, which means the will must be in a writing form, signed by the person who are making the will, testator, in this case will be Encik Helmi, and witnessed by the 2 person who is not beneficiary from the will, which means Encik Helmi cannot put the witness, his wife, his daughter, or his son. Next will be testator capacity. The testator must be at least 18 years old and in a sound of mind, which is Encik Helmi must be in a good condition, physically, mentally, when he made the will. The third one, in the term of witnesses, the witnesses must be present when the Encik Helmi sign and must also sign the will themselves. The beneficiary, Encik Helmi family, cannot be the witness. the next will be the executor. The executor appointed by Encik Helmi must carry out the will instruction. Encik Helmi, it is recommended that Encik Helmi choose the executor that his belief can carry out his will. So next will be the guardianship. Encik Helmi should name the guardian to take care of his son Hamdan because his son is autism. And also, if anything happened to him or he passed away when his daughter also still minor. Okay, the next will be the trust. Encik Helmi can use trust to manage his asset for beneficiary, especially minors and his disabled son. Next will be review and update. The will should be reviewed and updated regularly throughout a lifespan, but it is recommended to review the will around 3 to 5 years after significant life event. What you mean by significant life event is Encik Helmi suddenly possess any asset or someone that related to the will pass away. Maybe the name maybe the executor pass away or become disabled, or the beneficiary for the will pass away. So the will need to be reviewed and updated. Okay, next will be the legal advice. Encik Helmi also should seek legal advice from lawyer or professional will writer to ensure the will is legally sound and is reflected his wishes, which means the will itself must reflected what he want, and the executor can understand well the will, so he can carry out by the instructed in the will. The next one will be negative impact of delaying will. What might happen if Encik Helmi continue to delay his will? The first one, he will lose control of his asset distribution after his death. For example, Encik Helmi might want to give any of the assets specifically to his son, his daughter, or his wife, but without a proper will, there are no executor to carry out his will after his death. The second one, it might cause his family dispute over the wealth. Encik Helmi might have verbally tell to give any of his asset to his daughter, his wife, or his son, but without a proper documentation, it might cause the family to dispute over any of the wealth. Okay, the three will be the unfair distribution. The fourth will be increase of cost, legal process of the will if there is any dispute. If there is any dispute between Encik Helmi family member, it might cause cost because the dispute may be carried out into the court. The fifth will be resulting to stress and anxiety dealing regarding the asset. This is specifically for Encik Hamdan, Encik Helmi, wife, daughter, or his son. They might feeling stress and anxiety because Encik Helmi just passed away, but they are in a poor condition after his death. The last one will be his child will left without proper guardian. If Encik Helmi pass away without writing a will, so there is no proper documentation and no executor will be carry out Encik Helmi will of who will become guardian of his son that is currently autism. Okay, the next one will be Farah 8. But according to Farah 8, 2/3 of Encik Helmi wealth will be distributed according to Farah 8 ratio. This is specifically if Encik Helmi pass away. Okay, currently in this situation, Encik Helmi father already passed away, so the wealth will be left behind to his mother, will be around 1/6 of the wealth, and next to his wife 1/8 of the wealth, and the balance goes to his son and daughter. His son will receive 2/3 of the balance, while his daughter will receive 1/3 of the balance.